Hey guys, what's up? Welcome back to another training video. Today we're going to talk about another charting pattern called wedges. Let's get started. Yeah, this is a bullish wedge. Wedges are continuation patterns. They're kind of like flag patterns. Some consider them kind of the same thing. This does look kind of like a flag pattern. We talked about this before. That they're also, some it looks very similar to this is like a wedge pattern as well. But this one forms a rectangle. The other wedge formed a downward sloping angle. This is forming a triangle. So they call it a wedge pattern or a triangle pattern. It comes into the pattern, bullish or bearish, test each side a few times before breaking out and continuing. So now I'll show you the first example of a real wedge pattern. So this is our first example. This is an uptrend, so this is a consolidation. Uptrend, a lot of people take profit. Other people want to join into the fun. That's why it consolidates back and forth. It's between people joining in the rally and people taking profit from the rally. We see some consolidation, and it forms a triangle pattern, just like the example below. So the distance between the rally up into the triangle is going to be the distance of the breakout. We always use a measuring tool. It's not always exact, but it gives you a great target to take profits, because that's normally in the region that other people are taking profits. So this being a continuation bullish wedge pattern, seeing it come off the sides, higher highs, higher lows, and then a breakout from the top should be the distance between this green candle, basically. So let's show you an example of the breakout real quick. Okay, and see the uptrend, the distance between basically the uptrend to the top of the wedge, or the bottom of the wedge, is going to be your breakout. So you take that tool and you measure it from the breakout of the first candle and you measure it up. It's not a perfect science, but it just gives you a good target before this selling pressure starts, comes back down to retest the breakout region. So you want to get up, get your profits. You can enter back in down here. But a consolidation is basically the buying pressure stopped, people took profits, then other people jumped in and started buying at this level to catch the next leg up. They've seen the consolidation, they see the next leg up, so they're getting in the trade here when a lot of other people got in the trade down here. So we're going to show you another example of a wedge, and this is a bearish wedge. It's the exact opposite of this. It's also a continuation pattern. Okay, here's your bearish wedge. Notice a huge downtrend rally, almost vertical, and then consolidation. People taking profits, people joining in the trade, consolidation back and forth before the breakout continues. Now the breakout should be from here to the top of here. So we should see a nice breakout to the bottom. Remember, this is a continuation pattern. This is a consolidation phase. This is not a retest up phase like the patterns we were trading the other day. Okay, this is a wedge, and it's a triangle pattern. So let's take a look at what happens when the wedge breaks out. Okay, here's your example. Remember, it's a continuation phase. The downtrend resumes. You want to get from the breakout down. Notice it kept going, but this is a good area to take profit. From here to here, the same distance from the breakout to here. This is a wedge or a triangle pattern. They are continuation patterns. Okay, so in this lesson, we taught you guys about another pattern that's very important. It's basically them taking a break in between rallies. So a rally goes, people take profit, it consolidates between people joining the fund and people taking their profit, getting out of the trade, and then a new classroom of traders basically stepped in, and a new class of traders is making their move, and that's what causes that second leg. A lot of the people in the first leg got back into the second leg but took their profit here. Unless they're swing trading, they would get the trade up here, ride it down here. When we break down again, they take their stop loss, move it right up in this area. That way this leg is secured. Now it's like taking a second trade, but you're swinging all the way down to the next leg where you can either take profit, take partial profit, or continue the swing trade if there's going to be a third and final leg. So I hope you guys learned something from this video today. That's all we have for you. Take some notes, do some research on wedge patterns, and find them on your charts and see how many times they play out, because these patterns play out way more than they don't. If you play the rules and you play the patterns, you guys will win some trades. So we'll see you guys in the next training video. That's all I have for you today. Like I always tell you guys, in the description below, you're going to see a link Okay, it's to our free ebook, the Cryptocurrency Consumer Guide. Okay, that is the bitcoinconsumerguide.com/YT. That is the link in the description for the Cryptocurrency Consumer Guide. Now, there's also a free training class that we spent a lot of time putting together for you guys. Cody Sperber is now giving it away for free. He'll tell you all about it in the offer after you get the free ebook. Make sure you take advantage of everything that we have to show you guys. Don't sell yourself short. Make sure you watch the entire video. Again, it's in the description below. It's the bitcoinconsumerguide.com/YT. It's your boy Dave Rodriguez, and we'll see you on the next training video.